Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, June 16th, 5:52 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what you need to know for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market, we are in an uptrend. You can see over here on the trend gauge, we're flashing bullish slash uptrend for the three time frames and market leaders. All means all five of the major indexes that we track in these videos are trending above their short-term 21-day moving average, their medium-term 50-day moving average, their long-term 200-day moving average. And we've got good participation by growth leaders. Note, of course, we've got the stop sign because of the NASDAQ 100 being extremely extended from its 21 and 50-day moving average. We took a minor step in the right direction today. Really, what I saw today was kind of what I expected all week, but hey, you can have expectations always in the market, but you don't predict. And when something runs counter to your expectations, you have a choice. Do you either stick and be stubborn and say, no, this should be happening and wait for it to happen? Or do you adjust to what the market is actually telling you? Last week on the NASDAQ 100, 2 weeks ago, not this past week, 2 weeks ago, the NASDAQ 100 was slightly down for the week and still extended from the 21 and 50-day moving average. And my expectation was for more of that. We didn't get more of that. We've got four straight up days: Monday, Tuesday, Wednesday, Thursday, and then that added on to the previous Thursday and Friday after a big day down in the NASDAQ 100 2 Wednesdays ago. But uh, hey, strength this week until a rest day today. We take advantage of it. We don't argue with it. But we are extended. We know there could be a rug pull. We can correct two ways on these extended indexes. We can either correct through price or through time, or a combination of the both, meaning a gentle pullback stretched out over an extended period of time, or there can be a harsh pullback in a short period of time. You never know what the market has in store for you, but today's pullback uh, is certainly constructive, and you need it after being up, like I said, up 6 straight days on the S&P 500 and NASDAQ 100. That's the what just happened today. So although we've got red numbers, they're actually welcome. A little bit of cooling off in the market, and there's nothing wrong with that after a nice up move. So here are the numbers on the day. RG8, this is our 8 growth ETF composite, down 0.53%. S&P 500 gapped up nicely on the day, 0.4%, but put in the high in the first minute and ended up the day 3 waves down during the day, ended up down 0.37%. NASDAQ 100 gapped up 0.5%, making it even more extended than it closed the prior session. 3 days, three waves down there also. Closed down 0.63%, Dow down 0.33%, mid caps down 0.4, Russell down 0.7, global diversified 60/40 stock and bond down 0.21. In-house GROTECTION gave back some of our gains on the day, down 0.52%, up over 6% for the month. We don't want to give that back. We're doing our best to pull the weeds and water the flowers and still have a hedge in place, and looking for some sector rotation. We got a lot of that today. That's actually healthy, out of growth into more defensive and lower volatility sectors. All that rotation takes place within the S&P 500. That's why we love having SSO, an enhanced ETF that represents the S&P 500, because when all that rotation takes place, it takes place inside of the S&P 500, from growth to value, from high beta to low beta, from one sector to another sector. And that's what we saw today. And these are the net numbers, and we certainly welcome them. Let's get right into the charts. Here's your S&P 500. You can see getting extremely extended after a nice day yesterday. The day after the Fed, where we had kind of a shakeout. But all in all, positive and a one-day pullback after the Fed. I'm don't have a problem with it in any way, shape, or form. You can see if we go to the 5-minute chart here, the gap up and the high in the very first minute, and then one wave down, a reaction, two waves down, a reaction, and then three waves down, basically selling off the entire afternoon little by little, closing near the lows of the day, but still not violating anything. No major breakdowns by leaders, just pullbacks from an extended overbought condition. Here's the NASDAQ 100. Speaking of extended and overbought, still 10.6% above the 50-day moving average. Where did it close last week? 8.1% above the 50-day moving average. And, we considered that extended. And it is by historical norms. We are in a strong bull market and you can get extended, but I've studied this a lot and this is very extended. Like I said, we can correct via price or time or a combination of the two. Let's go to the Dow. Dow, after a nice day yesterday, just giving back a little bit of it, kind of keeping in line with what we saw in the other big cap indexes. Mid caps, no relative strength for the last week and a half here, really just consolidating the move. So we had this is the third consolidation, and the prior two have resulted in a move slightly higher, making higher highs and higher lows. So here was the first consolidation. We broke higher, pulled back for 3 days, broke higher. Now we're consolidating that move for 3 days, and staying above the ADMA. As long as you're above the ADMA, you've got absolutely nothing to complain about in any stock or index or sector or mutual fund, whatever. Little tighter on small caps, IWM. You can see that this is really a 8 candle consolidation because the lows are kind of in line with the lows from that prior consolidation, whereas with mid caps, it's slightly above there. But again, lack of relative strength over the last 8, 9 sessions for small caps, but still holding the ADMA. That gives you a signal of how harsh that big slingshot up was, this 4-day move that we had up off the lows with just one tight day of consolidating in there. And we're really just working that off. So those are the 5 major indexes. Let's go to the VIX. Although the indexes were down today, the VIX was also down, kind of an anomaly. You don't typically see that. Overstretched to the downside in a major way. Is it setting up for a violent move higher? Well, we're not going to predict that. If it comes, it comes. We'll handle it. If this can also work off its oversold condition by going sideways. Let's flip to the dollar. Dollar up today, bouncing off this 50-day moving average. Dollar has been running contrary to what the market is. So today, dollar up and market down. Not really a big surprise there. How did it do relative to the precious metal sector, which it normally has an inverse correlation with? Silver was up today, so silver bucked the trend a little bit, getting back above the 21-day moving average. Gold also up on the day. Sorry, this is gold stocks, GDX up 1.2%, but look where it ran into and where it failed again and where it's been failing over the last 3 weeks, the declining 21-day moving average. We get a close above there and some follow through strength, that would be a clear change in character for gold and gold stocks. Speaking of gold, same thing, running into the declining 21. Relative strength has been terrible relative to the S&P 500. And the 50-day moving average rolling over now also. Bitcoin had a bit of a sell-off earlier in the week, rebounded today after 3 days of tight action, a break to the downside. This is a very positive bar, still below the declining 21-day moving average, up 3.8% on the day. Let's flip to bonds, the broad bond index. Bonds traded kind of tight today. Pulled back after 2 days up on the price, meaning we gave a little bit back again, or meaning we gained a little bit in yield. TLT, the long bond, down 0.39%, ran into this declining combination of the 250-day moving averages above the 21. So it bounced at the 21. This is kind of what you want to see in gold, how the declining 21, that's the green line, has acted as resistance for TLT above it, pulled back, bounced there, and closed in the upper part of the range. This is kind of what you want to see as a first step in gold. Does that mean that interest rates are going to go lower as TLT goes higher? We don't predict. We'll just let the cards come out of the deck and have if then else scenarios on board for everything that happens. Here you see the TYX yield dropping below the 21, complete opposite as the TLT as expected, and TNX the 10-year still above the 21, really in more of a consolidation mode versus the long bond. So there are the major interasset correlations that we look at. Here is the tail of the tape to close the week. You can pause it. I'll hit the highlights. The news was that the University of Michigan consumer sentiment. This is bullish. The market reacts to this up 63.9. 60 was expected. We got a little pop after this came out, but it was short lived, and we still had that 3 waves down. Up 4 of the last 5 days and 6 of the last 7 on the S&P and the Nasdaq. 16-day rally we've got going on. That's 15 days above the ADMA, 16 days above the 21. I've been looking back in history, and one of the longest streaks that I found was from 11/4/2020 to 1/26/2021. We spent 55 days above the 21-day exponential moving average, and only 2 intraday cuts below the 21 and then reclaimed. The S&P gained 8.9% during that time. That was right before the end of the great growth SPAC bubble that happened after COVID. 2 weeks after that, growth stocks topped while the indexes continued to hold up very well. Why did they hold up well? Money flowed into big cap tech and also into other sectors within the S&P, while growth took a little bit of a break. So how do we do on the day? Well, anyway, expectations still positive. We're above the 21, but noting we are very extended. We've been talking about that. We've got the stop sign up for the NAS. In range today, as far as support and resistance go, the action was, as I said, immediate top, 3 waves down, closed near the low of the day. Gold stocks, the defensive sectors were up. XLB, XLP, XLU, and low volatility, which has expected. We kind of like this. As growth takes a break, the entire market's not selling off. Money is flowing into lower volatility stocks. Regional banks still bad on the day. We'd like to see some money flow into the financials. XLC and XLK down, cloud stocks down, semiconductors down, retail down, biotech down. In-house, couple of trades we added to Celsius. We trimmed AMD. We did some defensive trimming. AMD seems to have paused. It's not acting like NVIDIA. It was for a while. After their investor day, earlier this week, it sold off, and then today, one of the big brokerage houses replaced AMD with NVIDIA as their top chip pick, and AMD was weak all day. One of our most recent buys was flat. We just trimmed that. We like to keep at least 10% cash available in case a great situation comes up that we want to pile money into, at a good risk reward situation. Same situation with DT. Seems to have cooled off on a relative basis for a while, so we trimmed some of that, and we did some offensive trimming in Microsoft as we locked a good gain on a portion of that, basically selling a third of all 3 of these positions, offsetting the add to Celsius, getting us back to 10% cash, just a little slight tick down in our overall adjusted beta. The bottom line for today and for the week, really, S&P and NASDAQ 100 rest after 6 up days as defensive names lead. Let's see what next week brings us. And let's get into the 21 over 21 now. Only one change on the week. I'm going to point out, however, some relative weakness in a few stocks that we're taking a close look at. And we're going to start off with, well, first of all, the new stock is Unity. Now, they when Apple had their investor day for their new virtual reality headset, they pointed out and mentioned several times that they're partnering with Unity Software. This had a nice move up, digested, and then followed through with strength, breaking out of the base, pulled back on the breakout as it, really, it's really overbought. But look at the volume patterns here this week after we settled down for a while after that initial pop. This has a chance to be a winner. It's profitable. 56% sales growth in the most recent quarter. We understand that the the Apple VR set isn't even going to be available for Christmas this year, but we definitely want to get this on our list as a potential market leader, and we'll wait for a low risk entry point on it. And what did it replace? It replaced what we cut from the portfolio yesterday. Chipotle, uh, I had been pointing out, and I did point out the relative weakness closing below the 21-day moving average today. So we're finished with Chipotle, not only in the portfolio, but also in the 21-21 list. And the remaining 20 here, some of them are showing some relative weakness. In some cases, it's concerning. In others, it's not as concerning as it's just after a strong move up, relaxing. And I'm going to point out the strongest stocks in here. Note if there's a red flag next to it, means we own it in the portfolio, and there should be 9 of those by the time we're finished. Palo Alto, this is one that we wanted to get into this week. We had our opportunity early Monday, and after that, not really an opportunity after that. It really ran, had a very strong week. Note the relative strength line, one of the strongest stocks in the market, software security group leader. Chat. This is the AI ETF that we've latched onto, continues to ride the ADMA high, really extended from the ADMA, and it had this is very much expected, negative reversal bar along with the rest of growth today for the most part. Keeping an eye on that. We really like how that's acting, and it's getting a lot thicker uh, as more people learn about it. I really like the way we evaluated 6 or 7, 8 of them, and we like the way that this one is configured with the strongest stocks having significant positions in the top 10. Google, relative weakness here. It's one of the big AI stocks. As long as it holds the 21, we'll probably hold on to it. We've got a very small gain, not as strong as the S&P 500 during the same period. So this big volume bar down last Wednesday, along with the rest of tech, the leaders have recovered that and then some. This one has not. They've also got some regulatory overhang in Europe. If this weakness persists, we will cut it. Monday, uh, had a big gap down yesterday, but recovered nicely, then tried to move out today and pulled back. It continues to consolidate. This was a pretty strong move up. So this is a normal consolidation. After that, it's happening right above the pivot. Toll Brother, Toll Brothers, excuse me, had a little shakeout on Wednesday, holding the ADMA. Home builders continue to be strong, a little bit of a laggard over the last couple of days. Tesla, can't complain about this in any way, shape, or form. Great relative strength, great strong up move after breaking out of this base on base stage 1 cup. Palantir, one of the strongest stocks in the market. Look at that relative strength line. Every time it tries to come near the ADMA, it bounces. Live Nation, Michael did a deep dive on this, really likes it. We added it to the 21-21, haven't added it in-house yet, and now it's extended. And it fits in the reopening theme of people traveling and attending events, people spending money on experiences after being cooped up in their house for 2 years. Dynatrace, we trimmed a little bit of this today, and it's because of this line here, relative weakness, broke the ADMA. Volume, not really a concern. It's been about even with average daily volume, but it really had a lot of strength here after this breakout, after its earnings report, but that strength has waned a little bit. So we're definitely keeping an eye on that. this is our last two pyramid buys that we've now got stopped on one, and the other one, because of relative weakness, we booked very small gains in it. Elf is sold off early in the week, bounced at the 21, held the 21, but there's more red bars for indicating down on higher volume than there are blue bars here. This looks like it's being distributed. It's just a little, it looks like it's probably late. Here's three earnings gaps. Accumulation distribution declining at a B minus. I mean, it still looks fine. Relative strength waning mildly. Would not surprise me at all if this forms a bigger base. So this is on watch for getting punted out of the 21 over 21. AMD, we trimmed some of this. As I said, here was the big shakeout candle after their investor day, broke the 80 MA, sitting on this 120 support level, just not acting as good as NVIDIA, which is very clearly the leader. So trimmed a little bit of that today. Our last two buys on this are just break even. Supermicro finally resting after a big move up. It's entitled to it. A gentler pullback into the 21 might be an opportunity to take a small position. This is a very volatile stock. Celsius, we've added this to the portfolio. Two buys yesterday, another buy today, riding the 80 MA higher. Volume reducing over the last 2 days after it pulls back from that 150 level, natural level of resistance. Uber, our biggest position, one of the strongest stocks in the market. And it looks like it wants to go higher. Great close to the week. Nice volume, riding the 80 MA higher. Intuitive Surgical, Wednesday with the report that people are getting more elective surgeries. Intuitive Surgical broke out along with several other medical devices, and this one has just kept going. Note, while the chart looks fantastic, after its gap up on a relative basis, it's really not doing that much better than the S&P 500. So if you're in something like this, you're keeping pace with the S&P. If you're not really missing anything. Again, our goal is to do 2 times the S&P on anything that we buy. We track that meticulously. The big winners outweigh the ones that don't keep up, and we do our best to force our money into those bigger winners that can carry the portfolio substantially higher than what the indexes are doing. DraftKings, this is another one that's showing relative, let's say inconsistent relative strength. Very choppy. It trades very choppy, very frustrating. Actually, looks like it closed a tick below the 21 EMA today. I may take this out over the weekend. If I do, I'll update on Tuesday. Remember, the market is closed on Wednesday or on Monday for Juneteenth. This may get punted out. There are plenty of others to take its spot. Ferrari, another one that's a great chart. From a relative strength basis, however, it's starting to lag. Maybe just not a big enough audience for this. It trades thick enough for us, but and it's a consistent money maker. But do you want a stock that's just keeping up with the market? There's better. We're always looking for the 6 to 8 names that are just absolute leaders. It's tough to get into them. You never know until after you're in sometimes. Sometimes they take off and act great. Sometimes they take off, act great, and then fade badly. We had that experience with Lulu. We had that experience with Chipotle. Those were our leading positions at times over the last 2 months, and now they're not even in the portfolio. So you got to cut the losses, and when they start lagging, you got to look for what's taking its place. Speaking of strongest stocks in the market, NVIDIA, this is our third biggest position. Big gap up on earnings. Everybody knows the story by now. In upping their sales by 50% over the next quarter, pulled back nicely, bounced at the 80 MA, made higher highs. Looks fantastic. Meta, just riding the 8 and the 21 higher. Great stuff here. And reversal candle today, along with most of the other AI and growth type names. And we're going to wrap it up with Microsoft. Just wanted to take do some offensive selling on this at 350, a natural resistance area. It's overbought. Had a nice week. Had 7 straight up days before pulling back. just took a little bit of money off the table there again to get back to our 10% cash position. And that's the 21 over 21 for the week ending 6/16. So what are we watching for next week? What are the key levels? Uh, well, we'll start with the ADMA because we've been riding that for over 2 weeks. And if we don't bounce there, of course, we're extended from the 21. We're hoping, hope is not an investing approach. Uh, we open every day on if then else scenarios. What if the market does this? What if the market does that? What are our plans? Certainly our preference and the preference of bulls would be to correct through time, not through price. But again, we've got stop levels for everything that we own. We can hedge more. Uh, with the nice returns that we've had over the last 3 weeks, we want to do everything we can to prevent giving them back. 6% month is out of the ordinary. The market has been extraordinarily strong, uh, and we want to do everything that we can to lock in those gains if the market has a harsh pullback. But again, we don't predict. We're very allocated to the market, and that's what the price and the volume has been telling us to do, and we'll stick with that until evidence to the contrary presents itself. So remember, it's not how much you make in the market, it's how much of that you can keep. If you'd like our approach, reach out to me, Don at RevereAsset.com, or my partner, Dan Stewart, Dan at RevereAsset.com, or you can call us at 855 Real Wealth. That's 855-732-5932. Our podcast was published to YouTube this afternoon. If you're on our email list, you'll get an email announcing it over the weekend, but it's already out there now. And that's going to do it for the week ending June 16th. Of course, the reminder, it's not how much you make in the market, it's how much of that you can keep. And this is Don Vandenbord signing off for Revere Asset Management. Thanks for listening and have a great weekend.